So for the next topic under this module is the changes in inventory under absorption and variable costing. So this is to continue with our profit measurement. So here, what will happen when there is ending inventory? Okay, so we have here the following rules for our or for the changes in ending inventory under absorption and variable costing. So if number one, production is greater than sales. So what will happen is, if that is the case, our absorption costing income will be greater than the variable costing income. Okay, so we will explain this later on in the next slide. Number two, if production is less than sales, then our absorption costing income will be less than the variable costing income. And number three, if our production is just equal to our sales, then absorption costing income will also be equal to our variable costing income. So for the first case or status, if production is greater than sales. So we will take an example. If we have 50 units in production and after the end of the period, we sold 45 units. So the result will be there is ending inventory left. So using our example, we will have 5 units in ending inventory. So here, absorption costing income will be greater than variable costing income because, again, please try to remember, under our absorption costing, our fixed factory overhead is part of the product cost. So meaning, if there is inventory left, okay, after the end of the period, so part of those fixed factory overhead will also be left in the ending inventory as an asset. Okay, while under the variable costing, our factory or fixed expenses is treated as period cost or expense, meaning uh, regardless of the remaining ending inventory. Okay, so in under the costing absorption cost, under the variable costing, the inventoryable amount is only the variable cost, and all of the fixed expenses are part of our expense account. So therefore, it will have the effect of increasing the total cost under the variable costing that will lead to the decrease in our income. So this is actually in our illustration. Okay, so if you could still remember, so we will try to look, for example, here in the month of September. Please try to refer at your module. Okay, because we have their ending inventory in the month of September. Okay, next, for the second case, if production is less than sales. Okay, meaning our number of units produced during the year is 50 units and our sales is 55. How is that so? So meaning there is beginning inventory, okay, that is left from the previous period that is forwarded during the month, for example. Okay, so in our illustration here, if we produce 50 units and we have 5 units in the beginning inventory, so therefore it is possible that we will have 55 units in our sales. So for absorption costing income, it will be lesser than the variable costing income because under the absorption costing, the fixed factory overhead is in the beginning inventory. It's still in the ending inventory. Okay, and the units produced that were sold, okay, during the year will be also added in the expense in the income statement. So thus, there is more deductions, okay, under the absorption costing that will lead to lower income. So while under the variable costing, the expenses that will be recognized for the period is only for those units produced in terms of fixed factory overhead, because our beginning inventory only carries with it variable expense. Our fixed expense for this inventory were actually expense on the previous period. So that's why variable costing income is greater, because lesser expenses will be recognized during the period. And for the third case, if production is equal to the sales, then meaning we have no ending or beginning inventory. So the same amount of fixed factory overhead will be recognized as expense for both absorption and variable costing, thus arriving at the same or equal amount of income for both approaches. This is again uh, the same as what we have in our illustration in the month of August. Okay, so we have no ending nor beginning inventory. So please refer to your module. Okay, that in that case we have the same amount of income for both absorption and variable costing. Okay, so the next topic is about profitability of segments and divisions. So a segment, when we say segment, this can be a product, a division, sales territory, or customer group. Determining the profit attributable to subdivisions of the company is harder actually than determining the overall profit, because of the need to allocate our expenses. So in this case, we have to determine the individual expenses for each segment or division. And like for determining the overall profit, all we have to do is just to add, okay, all those expenses. Okay, so first is by product line. So this is an example of a segment or division. Okay, so a product that consistently loses money and has no potential to become profitable can be dropped, while a profitable product line may merit additional time and attention. So this is one of the decisions that the managers or the management may take, especially if they have different product lines offered to their customers. So to illustrate, we have here for Alden Company. So they manufacture two products, basic fax machine and multi-function fax machines. So the basic fax machine has only telephone and fax capability, so less expensive and easier to produce. While the multi-function fax machine is high-end machine. So this is a combination of two-line telephone fax, computer printer, and a copier. So this uses more advanced technology and is more difficult to produce. So the data for each product is also given. So marketing expenses are all variable, amount to 10% of sales. Our administrative expense is 2 million, all fixed. These are allocated to the products in accordance or based on their revenue. So annual overhead is $825,000 and is applied based on direct labor hours. So in the next slide is their absorption costing income statement in thousands. Okay, for both product and as well as its total. So please refer to the pertinent solution for each figures. Okay, so suppose the total variable overhead is 360 and total fixed overhead is 465 and is applied based on direct labor hours. Then our basic, for the basic, it's 261. We just follow the rules being presented, okay, by the information provided by the illustration. Okay, and as well as for multi-function. So for the preparation of our variable costing income statement, so this is what happens. So if you could notice under our variable costing income statement, the fixed overhead is deducted in the total level. Okay, and not on the individual item, just like in this case for absorption costing. So please take note of the difference. Okay, so here we have for basic, our operating income is $833 under absorption costing, and our multifunction is $1,042. Okay, but if you will use the variable costing income statement, what happened? Their contribution margin is greater. However, we have still the same total combined operating income for both approaches. Okay, so the only difference is the allocation of our fixed overhead expenses and administrative expenses. Okay, so this is how you are going to prepare under the two approaches. Okay, so the next part is divisional profit. So this is again part of the segment. Okay, so here divisional profit is often used in evaluating the performance of managers. Failure to earn a profit will also lead to division's closing. The divisional profit is usually calculated using the absorption-based approach, and a share of the corporate expense is allocated also to each division to remind them that all expense of the company must be covered, and not only their expenses on the individual product or division level. Okay, so we have here, suppose that Poly Gulp Incorporated is a conglomerate with 4 divisions. So alpha, beta, gamma, and delta. So corporate expenses of $10 million are allocated to each division on the basis of their sales. So our divisional income statements are as follows as presented. So the corporate or the divisional expenses were divided according to their sales. Okay, so again, all you have to do is just to get their ratio and multiply it by 10 million to get their share from the total corporate expense. So delta has or in this case, division delta has an operating loss of $2. However, it can be eliminated if allocated or if the allocated corporate expense is not shared. Okay, so in this case, for Delta division, their share from the corporate expense is $4. If that is not allocated to this division, then they might as well have a positive $2 operating income. Okay, so the Delta's divisional expense also were relatively higher compared to other divisions that also contributed to the net loss. Okay, because again, under divisional profit, we used absorption costing approach. However, if we will use the variable costing, the result will be different. Okay, because again, the corporate expense will be deducted from the overall profit. Okay, so that's for the divisional profit. Okay, so the next is overall profit. Okay, so in our previous discussion, we've learned about the different levels of profits. Okay, what about for the overall profit? So the computation of segmental profit is clearly useful in many management decisions. Okay, as mentioned earlier, segments and product lines may mean that overall profit is most useful in some context. So here, it certainly is easiest to compute and it does not have meaning. If the overall profit is consistently positive, the company remains in business, correct? So even if one or more segment is losing money, so that's why here it is very important also to determine or to measure the profit of those segments or divisions so that the management will determine if there is any segments that is needed to be closed, or that contributes to the lower profit, okay, that they are gaining. So that's how important is the measurement of the profits for segments or divisions. Okay, because again, if we will just base our decision or the management's decision on the overall profit, and it turns out that it's positive and um or income, so meaning they will still continue in the operations without knowing that one of their segments is actually losing. Okay, so that's for our module 2.A. Okay, so this is for pricing and profitability analysis. Okay, for our references, so I have taken the contents of this module from this references. Okay, so that will be the end of our discussion for module 2